Hello, everyone. Hope you had a wonderful and green trading week. Let's just go ahead and jump right into it here with the dollar. Pretty much hit the expected target here, hitting that 97.70 level, exceeded that target just a little bit here, and I still anticipate that we are going to see that reversal here back down into the 96, lower 96 level, and then start breaking down, as I said in previous editions, into the 94 to around that 93 around 93.80, I believe it is 93.60 area. But in any case, first things first, let's go ahead and just wait for this reversal to happen here. We do have a little bit of a move up in the dollar here, and that's basically and mainly, in my opinion, on the back of euro weakness that we've been seeing. And so once that kind of gets itself together a little bit, we'll see the dollar again start pushing right on back down because, as we all know, there are no rate hikes on the front, and we are looking at potentially more QE being put out there. And I say more because we've basically officially, unofficially started up with QE4. Name it as you want it, but it is what it is. So again, we have probably more rate cuts on the way as well to try to, stimulate the economy and all that, nonsense. But in any case, dollar looking to top out here and reverse back on down into the lower 96 level. So not much of a change here as far as that's concerned. Let's just go ahead and continue on forward with the analysis here, switching it over to gold futures. Now, gold futures again, still climbing to the upside. As I said last week, I am bullish overall. Had a very nice trade on Friday. It was great as I started off a little bit slow earlier in the week and then kind of did a nice rip to the upside. So as far as what I'm seeing on the daily time frame view here with gold, I'll just go ahead and adjust this just a little bit, just to kind of keep it all uniform and whatnot. So what I'm seeing here is further upside push. Now, the upside push that I'm looking at and the targets that I'm expecting to see probably this week based on some of the other metrics that I follow, and I should have just deleted this now that I look at it. So just to kind of keep it clean for everybody, because I use my own personal template. So this is the public one. Anyway, enough of the excuse, or enough of the reasoning behind what I'm saying. Now that we had the break above that 1572 level, and then kind of pushed back a little bit on Friday. Actually, I'm sorry, it was 1568, 1570, something like that. A little bit more difficult to see on a daily time frame. But in any case, I am looking at upside continuation. 1570 should continue to be built as support here with further upside pressure here. Next level test around 1584, and then ultimately by end of week, I would think that we'd be back up into around 1594, 1595 with a potential print in the 1600s yet again, on the back of what we're seeing with the virus fears. Also, the weakness that we're seeing as far as crude oil is exhibiting, copper is melting down as well. So all of those things kind of come together along with dollar yen pressure to the downside, lifting gold. Safe havens are getting bid. Keep your eye on silver. It's at that magical mark that I mentioned in last week's video, 1815. And if you look back on the spot silver charts, you'll see something if you're using fibs or whatever your metrics are. But if you happen to look at what that 1815 level is, or that mid 18 level on the spot price of silver, you will see something that will also give you a little bit more of an idea of where silver is going to be going over the next few months. So metals, getting that safe haven bid, looking for gold to go up to around 1594 to, no, I'm sorry, 1595 to 1596 with a potential for 1600 print this upcoming week. In any case, if we have any type of escalation with tension geopolitically speaking, there's a lot of stuff going on out there. Then we could also have gold continuing to break to the upside here above 1614. But I would say that this is probably the higher probability area here with I would say around 90% confidence as far as my own personal opinion, and the metrics that I'm seeing should lead to around 1595, 1596. That's what I'm doing. You can do what you're doing on your end. But again, if you're going to be short in this more bullish looking environment, I'll just leave it at that. Make sure you use your stop loss so you don't blow up your account. So let's just go ahead and continue on forward here, looking at natural gas. Now, natural gas, I've had quite a few inquiries coming in from all over the place. To be honest, I'm kind of surprised that so many were long and holding for so long. Given the overall bearish presentations that I've been personally giving, but a lot of I know others are out there kind of saying that the average price of this and that. I'm going to try to tell everybody once again, and I'll probably repeat myself through the course of continuing to do these YouTube videos for the public here, all of you, namely. focus on the charts. And I can't say it enough. Stop looking at weather reports. Stop looking at what this expert's saying and that expert's saying. Follow the money. The chart is following the money. Okay, if you're looking at what the money is doing, it's called a pump and a dump. Okay, that's basically what you're seeing. When you have these large moves, take profits. If you see that the price is going down and it's breaking below critical support levels, get out of the trade. There's nothing wrong with being wrong. What's wrong with being wrong is when you stay and continue to pray and hope. In the market, there is no room for praying and hoping. Okay, this isn't church, and I'm not trying to be, a prick or anything like that about it. I'm just saying the reality and the tough talk is hoping and praying. You leave that for other aspects of your life. When you're in the market and you're dealing with money, small losses, that's acceptable cost of doing business as an investor or trader, whatever you consider yourselves. you know, when I may take a couple of small losses here, but then I take one standard win, or I get a large win and I overshadow whatever the small loss was. That's just simple mathematics. Now back to the analysis of what I'm seeing with natural gas here. So again, looking at your monthly time frame view, and the reason why I look at the monthly is because number one, I need to look back far enough in time. Secondly, we're basically towards the latter part of the month here, January basically ending on Friday, and then we'll be in February. So basically, as I pointed out, I don't even know how many months ago, was looking at this low level here to be tested, and we're basically starting to encroach in that area. And I say basically starting is because we're still pretty high up, right? We did print 180. Price did not hold up very well this past week. In fact, it was looking like it was going to be a pretty solid looking weekly candle, indicating a potential reversal up into maybe 202 to 203 ish. So right now, it's not looking that great. It would need to get back above the 194.5, 194.9 level. This is all just from memory, so excuse me if I'm a little bit off on a few points there. So what I was trying to say is it needs to get above the 194.9, I believe, level in order to try to go up for that gap fill between 2 to 201, maybe hitting up around 201.5, and then still a high potential for a bearish move back to the downside, as we do have record short positions. I did see an article about that, and it is rightfully so, because everybody's looking back at the longer term picture going, oh, well, there's still opportunity here. I mean, it could go down to 170, it could go down all the way to 160, it could even print 1558. You never know. That's why I say it's always best to watch, monitor the price action, see if it's confirming the bottom is going to be in. You got to get everybody on the same side of the fence in order for the party to go back up the other way. And I say party, and I just mean momentum, right? We're just speaking about in terms of momentum and investor sentiment. So essentially, the way it's looking right now, it may have potential to go back into the 194.9s. It needs to hold, and I'll just drop into my 4-hour time frame view to kind of get an idea so I don't speak out of line here. But basically, we would need to be holding around the 188.5 level, it looks like, in order for us to try to go ahead and push back up into the range here. And the range is basically between 189.6 to around that 195 level, just to keep it kind of easy. And obviously, I don't have it laid out here. Needs to get back up into this range, break above 195, consolidate, and then you can get that pop back to around maybe 201, 015, and then another potential reversal back into the range. If it breaks through the range, testing those 180s again that it did put in, then we're looking at, and again, I go back to my monthly now, then we'll be looking at a potential to revisit the lows here around the 165 to 160 level. Then we get that double bottom bounce in here, potentially back up into at least, I would say, around 210, 212-ish, maybe 213, and that is again going to take a little bit of time to happen. So by a little bit of time, I mean it could take through February into March in order for us to get back up into the mid two area, like the 220s, for example, 230s. Could take us into the March, April even, to get there, and then we could start talking about longer term, up into June, maybe getting back up in around 250, 260, maybe. So again, it's all about how responsive it is off the low, and then how much follow through we get in basing, or consolidation, I should say, in those 216s, the 215s, like we did here when we were trying to get that pop back upside, and then it failed and went down. Same type of a thing. You want to see that consolidation occurring at that higher level around 210, 212 in order for it to get back up into those 240s, 250s, 260s come June, July timeframe. So it is potential potentially going to see a lot of chop. It is potentially going to dip down into those 160, low 60s, maybe 158s even. You'd never really know until it does go ahead and stop. But for right now, everybody's focusing on that double bottom around the 160, 165 area. So keep your eyes on those levels. A lot to take into consideration here. And again, and as I told my my clients just a few moments ago when I did the member video for them, the party right now is not in energy. It is not with natural gas. It is not with crude oil. Unless you're shorting these, the party is not there. Now, the party, as far as I'm concerned, as far as where the momentum is, and where there's the best opportunity to capitalize on the downward pressure or what's happening in the marketplace overall, is the indices. Now, I'm not sure, if all of you are, playing the indices or not. I know I don't really cover them for the public on my channel, but the indices, great place to, take up some potential short positions. There's obviously those of you that are paying attention intently on the market conditions and not just a few things here and there in your spare time. The indices overall are very overheated and also due for quite a pullback as well. So that's a good place to be, as well. Safe havens such as your silver and gold plays. Even copper is also showing continued bearish action as well. So that is another place that you could take a look at. But I would say focus more on the safe havens and keep yourselves obviously protected as always. So let's go along here with the final pair that I do go ahead and look at here for everybody, and I'm going to go ahead and drop down to my weekly time frame view so everybody can see what I'm looking at. Now, last week I was looking at I believe around 57 as the point of reference where things might be able to try to consolidate a little bit and then try to push back up. Well, 57 was smashed. It was taken down very aggressively. Then I was looking at around 55, I think it was 55.50 or something like that. Broke that level as well. Yes, it was 55.50, just looking at my fib here. So again, with this bearish looking candle, we had a fake break to the upside and with a smash to the downside here. Excuse me. Looking at next area of potential interim support is going to be around the 52.80 level, which is around the mid fib between my 23.6 and 38.2. Could get a little bit of an interim bounce in there, but ultimately, and rightfully so, due to the technical nature of this picture, you can see that there's a pretty good probability that we'll be pushing back into around 51 to as low as around 50.75, 50.80. So again, it shows that there is a lot of fear out there about what's happening with global growth in the face of this virus situation. Geopolitically speaking, I don't know what's happening as far as why their oil price is falling so far when you have a potential further escalation with Iran, and then the Libya situation that's not really getting that much press right now. But clearly there is a lot of concern about global growth right now, and money is coming out of crude oil and copper and indices. Well, basically everything's just going to safe havens at this time. So that's basically why I said what I said just a few moments ago with regard to playing energy, crude oil, natural gas. Just not a place to be unless you're shorting. Then, well, just like with the indices, it's a great place if you're shorting, but if you're trying to go long on something, you want to be where the party is with safe havens in general. So, or whatever you go to whenever this type of an environment starts materializing. So, be very careful here. As I said, in weeks prior, always use your stop loss. She moves. Let's say you start making some money on your position. She's moving away by a few points or whatever. Always protect yourself, move your stop in the profit, ride the wave for free, stress free, and let her go to your target. And remember the old saying, be greedy when others are fearful, and fearful when others are greedy. Till next week. Next week. I will be going away next week, so I will try to get the video out sometime probably in the latter part of Sunday, and I think the Super Bowl is next weekend as well. So some of you will probably won't even watch the video until Monday or later on Sunday. So I'll try to get it out as fast as I can, but it all depends on when I get back from my trip out of town. So I just wanted to give everybody that heads up at this time, just in case you wonder why the video isn't out and it's 5 o'clock or whatever on Sunday. It's because I'm just getting myself back into town and unpacked and all that stuff. So again, green trades to you all. Be very careful out there. And as always, if you have any questions, just go ahead, send me an email, thetradersperspective@gmail.com. You can leave a comment at the bottom of the video and click like, share with your friends if you find my content is to your liking. And till then, my friends, be well and be profitable.